Ellen, I have an extremely vague memory of the economics I learned in college. And one of the things I remember is that when a commodity price falls, we expect to see the producers of that commodity making less of it. Oil price is way down. Shell is the first of the major oil companies to report its quarterly results this earnings season. What are they up to?
Well, first of all, they reported the quarter four. They weren't particularly good. They missed the comparable analyst consensus number by about 20%.
Right.
Shares were down around 4%.
So the earnings weren't good.
Earnings weren't particularly good, but I think the focus here is really on what they said about investment, capital spending going forward. And what they said is they are going to cut by roughly about 14%. They're going to take about $15 billion worth off of their capital spending over the next 3 years.
Is that enough? Was that what people were hoping for, or were analysts looking for a bigger number?
I think some analysts think that that number will go up as the companies, not just Shell, start to realize that maybe this lasts for a little longer than they anticipated. Shell's view is a bit different. I mean, here's a company with a lot of financial strength. Most of the super majors have strong balance sheets, enough cash flow. They feel that they can kind of wait it out as they put through, engineering and eventual final investment decisions. Their long-term projects will be coming on over the next 1, 2, 3, 4 years.
So, do those projects make sense if oil prices don't bounce in the near term?
The answer is no. If they stay around here, probably not. And I think the oil executives would admit that. It will cause some problems. In the meantime, I think they're willing to take some action here. Again, Shell's statement, and we've heard from ConocoPhillips also today. These are early warnings that it's going to probably be a slow descent of CapEx, a slow burn on this. And you know what? Shell has to find some oil and gas. Their replacement ratio, that's the amount of reserves that they're adding compared to what they've exploited, right, produced, on a 3-year basis is not very high. It's around 85%. So, they need to find more.
Or they're going to run out.
They're going to run out. So you can understand why they have this sense of supply will eventually tighten and maybe the oil price will come back. But if it doesn't, watch out.
Thanks, Ellen.